From there, why are the banks slow off the mark to effect this particular benchmark rate? Dr. Mcfie.
Well, the first thing is rate capping has been removed.
Yes.
All right? So the banks really are free to charge whatever rate they want. Now, who was one of the persons who really was very, very pro removing rate capping? It was the governor of the central bank. So I can't understand why he is now, saying to the banks, well, look, you haven't lowered your rates to 12.5%, when he actually was the one who was proposing all the time, look, let us in fact remove rate capping. So the banks are free to charge whatever they want. Now, the problem all the time is banks in Kenya earn an incredible amount of money. The economy is not doing well, the banks are doing well. So interest rates in Kenya are very, very high. Let's say in the developing country, interest rates are very high altogether. But I think all the time we've got to compare ourselves with, let's say, a country like the US, where you would pay on a mortgage 3 or 4%. So, we got to understand here that the banks, there are expectations of their shareholders. They want them to earn even more money. So since rate capping has been removed, the banks really are free to do whatever they want. In fact, they could actually raise their interest rates now to 16.5% rather than leave them at 13. Now, the central bank is kind of watching all the time and making sure, well, now wait a moment, you don't do that. But, well, you give people freedom. If you give people freedom, they've got to do what they can do whatever they want. So here, the banks are free. So therefore, there's no problem about them leaving those interest rates at that particular rate.
So are you saying in a way that the banks should not really care a fig about also the benchmark rate that is given out by the central bank?
Well, yeah, simply because it's no longer relevant to the banking fraternity. That rate, okay, is, it's been lowered and so on, but okay, if you're thinking about the customers, obviously you say, okay, well, that should be reduced. But the banks, rate capping has been removed. The banks can charge whatever they want. So therefore, if they leave it at 13%, the Central Bank of Kenya has no, if on the one hand, they were the people who are saying, remove rate capping, okay, it's removed, so let them do what they want. So that's my take.
Dr. Kituro, do you fly with what he's saying as it is right now, that you don't really care a fig about what the benchmark rate from the CBK has indicated?
I think Mcfie is correct. And it comes even when we started the capping, was all this, that the banks are charging whatever they want. And we went that you can't charge more than 14%, I think. And then you have removed it. And I think we have perhaps a different way we look at the banks in this country. And it's worrying when the banks are making more money and the economy is making it not as that much. So it actually tells you, my understanding why we have the banking sector is to lend money and create wealth. And then you see the economy booming. But you have one side here, which is just making money on its own, and you don't see that in terms of the borrowers. I totally agree with Mcfie. The debate was there. It came out, the banks came very strongly. They are free to charge what they want. I can come down, I can go up.
Correct.
So I think to me that's probably where we are. And I will not blame the bank because they have that opportunity to charge what they want. But I think fundamentally a bank, and I hear your question, and good bringing about equities of this town and the others, I think the bank itself must have a conscious, how am I creating opportunities for people to borrow? Because that's what it should be. And you look at, and I've always argued it before, and I will continue to do that. I'm not really so much bothered about how much you charge, but there's a margin. It's incredible in this country, because I borrow this and you're charging me at higher interest rates. If you look at where banking sector really propels the economy, the margin is almost 0.02 or 1%. And I can go there and borrow. And the other thing is, I was sharing last night with my students and asked them, some of you have property. How did you buy that property? They said by borrowing. Because you can't save. If you save and have 100,000 and something happens in the family, I will go and withdraw. So the only way to create asset, to create wealth, is to borrow. But you must make that avenue attractive. Not attractive that I'm not going to pay, but it's something I can manage. It's the same thing you talk about profits in a business. There's a certain margin. If your costs are more than 35%, then you're not making money as a business. So we should in a way that if I put 5 shillings, I'm getting 10. And therefore I can actually pay the loan and save. And actually, let me talk about a bigger word. It's not really saving. Invest. Invest. Because investment is probably what creates wealth as opposed to saving. So I totally agree with my teacher. Unfortunately, I have bad account. And I won't blame the bank. They have that opportunity to change what they want. But I think there must be a conscience behind what they're doing. All right,
but it's borrowing heavily from the banks, as we saw earlier. Also, the Saccos, the borrowing from Saccos have really grown exponentially, meaning many people are avoiding the banks. They're heading to the Saccos as it is. Let's hear from Dr. Sizimwan.
Yeah, I think as has been rightly said, it's a free market. And if there are no rate caps, it means that they are free to choose what they want. And when they make that choice, there's a consequence to that choice. Okay? Some people may find that borrowing from the bank is expensive, and therefore they will move to the Saccos, right? Others will say borrowing from the bank is expensive, therefore I will focus on saving what I can and live, within my means and live frugally and save and buy whatever assets I need to buy. So there is a consequence to the choices that they make, and those consequences can impact their profits positively or negatively. Now that is a decision they have to make themselves after weighing out all the possibilities that can happen. And what is very clear is that the banking sector here is very profitable. In fact, if you compare the banking sector, for example, to the insurance sector, the profits from one bank are the profits of the entire insurance sector in the country. For example, I'm just giving that analogy. Okay, the entire insurance industry makes the profits that one bank makes in Kenya, one middle-tier bank. So we are saying they're very profitable, but they also make decisions to enhance that profitability, and some of those decisions can also hurt them. So there are also banks that are suffering in this country because they're not making any profits. Despite trying to lend money, people are not going for that money. They have high costs and they're not profitable at all. So they're struggling. And I think it's a large number of banks that are in this segment of struggle. And in fact, the ones that make profits are really selected banks.
So the first tier banks is where we have exponential profits,
exactly,
supernormal profits.
But
yes. Then the third tier
they struggle. They struggle generally, and this is now the question: is it that people are able to continue borrowing from these larger banks and they don't worry because those banks are stable? People are attracted to them, and they know that if they put their money there and they borrow from those banks and they get good service, it's okay, and those banks will continue to prosper. But those are all business decisions that have to be taken. At the end of the day, I think it is also important for the banks to think about that issue of conscience. And in fact, we call it in the insurance industry, treat the customers fairly. Okay? The way you'd like to be treated. We call it, we have what we call the TCF, treats customers fairly. And I believe the banks have also got that, where they say, we will still make good money, a good return on our investments, even if we lower interest rates. And in the process, we shall also be helping our country because people will be able to finance their businesses, they'll create employment, and we are all better off. So that bigger picture, I think, should also be part of the bank's agenda, apart from the narrow profit motive, sometimes which we somehow tend to focus on all the time.
All right. Patrick.
You left me for last, obviously.
Yes.
Because of all that. I think let's just look at the whole money market in the country. People talk about Saccos. What is your interest rate when you go to a Sacco? It's exactly the same. 13.5%, 12.5% per annum, 1 to 2.5% per month. That's what you get. And people are saying Saccos are okay. But yet you're paying exactly the same interest rate.
But that was before the interest cap rate.
No, even now, they're exactly the same. The only difference that you get is that to obtain a loan in a Sacco is much easier than it is to obtain a loan in a standard bank. And this, whether it's first, second, or third tier, the same thing. Because the first thing that happens is the oversight of the central bank on banks is very, very, is in very, very fine detail, right? You're looking at your capital ratios, you're looking at this, you're looking at the other, and everything else. So your cost of being a bank is actually quite high. The second thing is, if you look at where the money is being made in most of your first, second, third tier banks, it's from the government. And what rate are they giving you? Exactly what you're talking about, 12%, 13% when you lend money to the government. So most of that money is actually made from the government itself. If you talk about the Mwananchi in that area, a lot of people are actually getting reasonable interest rates when they go to the banks. There were two things that happened when the interest rate cap was removed. One was that anybody who borrowed under that particular thing was kept where they were. So if the interest rate goes down, you have to negotiate. But the agreement was that if I was borrowing at 13.5%, it will stay there. So if you had a loan under the rate cap regime, you will stay there. Unless you are a good customer in the bank, then obviously you can negotiate and it comes down and it will begin to float. But then it means that new lending at this point in time will be on the basis of risk of the person who is coming to borrow money, which has always been the issue, that it is the risk profile of the individual that determines the amount of, the interest rate at which you get. And I think banks have always been saying that we need to do several things. One, the whole area of the credit reference bureaus, that has to be made a lot more robust, and a lot more data has to go in there. Not just your credit rating with the bank, but things like your electricity bill, your water bill, your whatever it is, and everything else, so that you get a full portfolio of an individual, so that you can rank them properly based on that rather than getting security. Securitization, the cost of securitization is high. A title deed in this country, to actually make sure that it's okay, is an expensive process. We know that the government was talking about using blockchain and everything else to create a very secure environment for documentation exchange. That is not happening. But if that were to happen, and then digitization of the land record and everything else, then a lot of the transactions in terms of ensuring that the security is good will go down. So I think there's a lot of discussions that need to take place, not just the interest rate alone, but what goes into the cost of a loan. And once all that is looked at, then you'll understand that there are lines below that that need to be compressed so that the cost to the borrower begins to come down. There are discussions taking place at the moment,
yes,
right? And I'll say this because it's an industry-wide thing, about the new dispensation post-interest rate caps. And that has not been concluded yet. Because as you've all said, the other panelists have said, banks want to behave responsibly, right? But you behave responsibly within an environment that is common to everybody. You don't want to be in a jungle and you say, I'm behaving responsibly. And that was really why the interest rate cap was put in, was to create an environment where everybody is operating in the same, within the same rules. So I think post-interest rates, we also need to create a new environment where you say there is the responsibility of banks to lend to people at a rate that they should be able to afford to stimulate the economy, etc., etc. But that has got to be done in a situation whereby everybody follows a basic set of rules. And I think the discussion about that basic set of rules is actually currently ongoing. And once that is done, I think you'll see the difference coming out. And I think that is probably a frustration that the banks currently have, that the speed of resolution of this environment is a bit slow. Right? But that is what I think all of us in the banking industry are hoping, that if we can get those rules out, then I think the issue of interest rate caps and everything else will become a discussion of the past, and there'll be a much more responsible lending, especially to the SMEs, right, who I think are the biggest hit at that level. And I think that every single bank has wanted to basically give good credit, affordable credit to those people. But even in the days when you're getting money from AFDB and all these other banks into the banks, you look at the funds that the government had, which is supposed to be like a collateral within the banks, still people are not getting loans.
Right.
So I think the environment has to change, and the rules of operation under the no interest rate cap.
Yes.
Have to be agreed, set out so that everybody knows that when I walk into a bank, at least these are the rules, and if I obey those rules, I get credit.
And I think we need them more today more than ever. If December of 2019 was something to go by, you could actually see people didn't have opportunity to spend.
No.
And I think we need almost what we did 2007-8, an economic stimulus. And I think that's what we need everybody in the room, banks and everybody, government. How can we almost jumpstart this economy by an economic stimulus? Because the economy is depressed as we talk, but there are opportunities, and I like the point Patrick is raising. Let's look at together, banks, everybody, and see how we can bring money so that people can spend. Because through spending, it's through productivity that you create opportunities for growth. Yeah. Right now, and December to me was a very good indication that there was not much to spend.
So it's good to know that actually there is a conversation which is ongoing, because as Mcfie was putting it, that banks now have the latitude to charge whatever they want because the interest rate cap is off. We can go back to 28, 30%, being charged on, credit. But in light of what also we had with the UNGA, the last UNGA that we had, that is United Nations General Assembly, we had even most of our banks here in the country, some of our banks also being, should I say, signatory to the responsible banking principles that actually were laid out. And maybe if you can just speak that, I have what are the principles here and some of the focus that they had put out is one, alignment. They're saying that we will align our business strategy to be consistent with and contribute to individuals' needs and society's goals, as expressed in the Sustainable Development Goals, the Paris Climate Agreement, and relevant national and regional framework. But we can drill deeper now to 3, that is the principle 3, clients and customers. We will work responsibly with our clients and our customers to encourage sustainable practices and enable economic activities that create shared prosperity for current and future generations. This is all about the SDGs, but we're talking about the shared big picture, the shared prosperity as it is.
Yes.
So we have in the country here where we have supernormal profits being being met by the banks, but now charging exorbitantly in terms of interest rate from the banks as well. Where is the shared prosperity? What are the principles? They're here. So responsible banking. So it's good to know that there's a conversation so that at least we'll have a domain where some banks will not be charging outrageously on the interest rates.
But what I want to take you back. There's 2 things I want to mention here.
Yes.
Number 1, I want to take you back to the whole story of the Saccos.
Yes.
Now, if you borrow 120,000 shillings from a Sacco, John Mwaka in Sasra actually showed me the maths of this. And let's suppose I'm being charged 1% per month. This is what you mentioned.
Yeah.
Now, work it out, 120,000, the first month I pay 12,000 shillings. You can do it very, very easily on a spreadsheet.
Yes.
The next month I'm going to, now I've paid 10,000 shillings, so it's now 1% of 110,000. Work it out and you'll find that that rate of interest is 6.5%. That's why the 1 inch you're going to the Saccos, because interest rates are very much lower. And we got to understand this, the point is, so often we say, well, look, the United Nations have said, the United Nations, they're a bunch of people who live off your money and my money. And they make declarations, and what happens? Nothing. This is the point. So, these, the development goals, okay? Sustainable development goals, there's 17 of them, and some people will talk a lot about them. And we got to achieve these. Those will not be achieved. 2030, Vision 2030. Ni maneno tu, ni maneno. And Kibaki was a very wise man, because by 2030 he may actually be alive.
Careful, Mcfie. Vision 2030.
I know. We need action. We need action. These tourist towns of Isiolo and so on. One north of Mombasa, another one south of Mombasa. Where are these towns? Where? I don't see them.
Isiolo.
But maybe Isiolo is now. Yeah, all the tourists are flocking to Isiolo. Are they?
No.
Okay, so read Vision 2030. Read it. Read it, so that we know what we're talking about. But the other thing is, there are 8 pages of properties being auctioned in Monday's Nation. There are rich people in Karen having their properties auctioned. There's no money in the economy. Is it because of borrowing? No. It's because the government is not paying its debts. That's the big problem.
But why is government not paying its debt?
Well, Julie, that's a very good question. But the only thing is, you know, you sometimes find that a lady is saying, look, I live on loans. How do you live because you've got... Now, a person cannot live on a loan, because if you are going to repay a loan, okay, you can't actually be living on loans. So the position here, okay, is that person, I know I've done it. I've loaned people. There was a friend of mine, I remember I owed him, I lent him some money. He died on the Mombasa Road before he repaid it. You know, and so on and so forth. So the point here really is, you know, we talk, well, we've got to know the environment. We know the environment. We know the environment. This maneno is just maneno. And, you know, are things really going to change as a result of this? You know, what we've got to do is we've got to look at society and examine it. You know, I had a past student there from Kioi. He used to work with KPMG. This is a man who had X-ray vision. You know, he would go into a company at 8 o'clock in the morning. He'd know exactly, by lunchtime, he could see how that company works, the key people in that place, you know, the decision makers and so on. Some people have that ability to see things.
Correct.
Now, I can call myself an economist, but an economist is a person who looks at a situation and he works out how people are acting in that particular position. Now, I can get a first-class honours degree from the University of Nairobi in economics, and I will not be able to do that. We had a CS who could not do that. We have economists in the World Bank and the Central Bank of Kenya and the Treasury and so on. They can't do this. We had a president who had a first-class honours degree in economics.
We know that president.
Okay.
Yes.
He increased the parliament by 50%. He created a Senate. If the US Senate was as big as ours, relatively speaking, it would have 500 people in it, not 100. Okay? He created a governor in every single county. When he was going around the country trying to persuade people to vote for this constitution, he said we're going to even have more counties. In Denmark, there's a lady, Monica Keritz and I, Denmark said, look, we tried this. These counties were uneconomical. We've actually merged counties. Okay? Can you merge counties in Kenya? You'll never do it. Why? Because the people who are benefiting from this county situation will vote against it. So we're back to this problem, democracy. Democracy. Watch out, democracy. Forget it.